So Bitcoin, here we are in a very, very tight consolidation range. As Neil just mentioned in the group, we haven't been in this kind of tight range for this long since really September, October 2016. We had a little bit more of it in December, and then after that we had really the start of the great rally, if you like, or a big rally in Bitcoin. So, you know, these kind of tight, narrow consolidation always produce big moves, and they produce lasting moves. The problem is, you know, anticipating them and deciding when they're going to go too early. Now, we've talked before about how Fibonacci levels become support and resistance, and support and resistance work from either side. So my concern with Bitcoin is we're holding underneath quite important levels. So if this was the 50% pullback from the big low to the high, that became resistance. Now that we're down here and we're in this tight consolidation, we're looking at what do we need to see if we are going to see Bitcoin go higher and we can pile in and buy it. And really, I think if we look at the February low, that first low, when we thought we'd made a decent low that we could buy against and spiked it, we didn't close above this level. And so this 66.50, this is Bitfinex prices, is really the short-term resistance. And then if I look at the neckline of this head and shoulders pattern, inverted head and shoulders pattern that we made in June, that kind of 68.50 is also our sort of upper and support and resistance. So I would say, looking at these levels and these support and resistance levels on the daily, if we take away our moving averages for a second, it's a bit easier to see. We can see that 66.50 above a daily close, above 66.50, which we haven't managed to do for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Would be an early warning sign that we're going higher. So a daily close above 66.50 is an early warning sign, and a daily close above 68.50, which is really only $200, is going to yell, that's it, we're on our way, and we've broken out. And so then we go back and we test resistance, we can look for measured moves, etc., etc. If we do break higher, we're going to look for measured moves from this low like this. So we're going to look for 7,000, but more likely 7,670. That's where we back test this. Sorry, I've just moved it. Let me put it back. That's where we back test the 61.8 fib level that was support, resistance, and so on. So an important level, and I think probably are a really good first target if we break out. So 66.50, daily close above it will be our early warning we're going up. A daily close above 68.50 says I'm out of here, and we're looking for then 76.70 first. And only above there, you know, because these fibs levels are like a staircase. You know, you're going down, and when you're underneath them, they become resistance. And so unless we can get above that 76.70, we still risk one more kind of step down lower to this 4,400 level. So that's where Bitcoin is. So short, that's the bigger picture view. Now we need to look at what we're doing here on lower time frames and is any of it tradable? And to be quite honest, it's not. And if we look since the beginning of October, we haven't managed to get an hourly close above this 66.50. We've had a spike above it, but we've not managed an hourly close above it. So let's put an alarm on this level, and we'll get an alert when we're crossing it on the hourly, and perhaps we'll get an entry. But all the time we're underneath this level now, for me, I'm staying out of Bitcoin. Okay, and I'm not selling it yet. But if we get a sell set up, I'm not averse to kind of selling selling against it, just, you know, to protect some long-term crypto stuff. So there we go. Sideways range. We can draw it as we can draw ourselves, you know, support and resistance and make it a triangle. But this 66.50 level that comes back all the way from February, this is the key first level that we need to see trading above. Okay. So we're still not broken out then in Bitcoin. Does that mean that any of these others may break out? Well, they may. When I look at Ethereum, this is ETH-US dollar. ETH-US dollar really is trying, not giving it back up, not breaking down, you know, but really a very, very tight sideways range in this one. I've got a trend line like this, an upper trend line. My concern with this one, and why I'm not buying Ethereum when I'm flat Ethereum at the moment, is that this rally was an ABC correction. So we went ABC up, and now we kind of need to go ABC down before we can rally again. And so if we do that, we need to measure, have we done enough really for this ABC correction to be complete? Sometimes, and Ethereum's done this before, it doesn't make the price target. Ethereum will correct sideways in a very tight range in time instead of price. And you see that, you know, when you see markets have a big rally and then they don't pull back at all. They go very sideways in a very tight range. This is what I mean by correcting in time instead of price. And this is why we use moving averages, because when the moving averages catch up and bunch up, then they're usually ready to go again. Well, we're all bunched up in Ethereum. We're all ready to go, but there is a risk that we pull back and we retest sort of 206, 207 in ETH-US dollar and make that ABC. Potentially we come down to 186 before we can look at another leg higher in this one. So I'm not falling over myself to buy Ethereum yet. However, if we did break high, you see how we're going sideways around this 4-hour 200 moving average. It's kind of the daily 20 moving average as well. I think if we broke out from here and then had a pullback that found support, I might have put my toe in the water at buying it. But for now, I'm sitting on my hands going really quietly with this one as well.